Let's bring in our market insiders. Jim Lacamp of RBC Wealth Management, Mike Ozanian of Forbes is still with us. The whole team is here. Andrew, Larry, me. Mike Ozanian, what is going on with the last 20 minutes of trading? I looked up, we were higher by 200 points, and the next thing I saw, we were down 74. It happened in like 6 minutes.
I don't know. I think there was that durable goods report that they kind of thought
like
was
8:30 in the morning,
it was
wasn't
weak,
it?
but they started digesting and they looked because that report was up. It showed growth, but they started looking beneath it, and you started to look at capital goods, things not related to
at 3:54 in the afternoon.
Exactly, 3:54 in the afternoon. That's exactly when they looked at it. Look, this Fed rate cut is bogus. I don't think it's going to have any impact on the market. If anything, it'll undermine the dollar.
You know, I'm kind of intrigued by this. It may be the market is saying, hey, weren't we at 1%? We didn't
We've been there already.
Right, we've been to, didn't have a happy outcome.
Seen that movie before?
Seen that. That was the Greenspan mea culpa, sort of. And maybe the market is saying, you know, you can do this liquidity stuff without abolishing the Fed funds rate, without going to zero. Maybe the market is a little. I wonder if there isn't sort of, what is it called, buyer's remorse after an hour or two of dissecting this?
Well, mortgage rates, I mean,
point.
long-term rates, mortgage rates have actually been inching up. So, I mean, you know, I don't really see the impact on Main Street of having this rate cut.
So, Jim Lacamp, what do you do, especially if you're a novice sitting at home, a regular Joe the plumber who wants to invest in the market, and you see this sell-off last 10 minutes every day? What should somebody think?
I think you get used to it, and you use rallies like you had yesterday to get rid of anything you're uncomfortable with in your portfolio. There are things you can buy in here, but you buy them on dips around Dow, 8,000, where there's been support in the market. You buy companies that are selling less than their cash value. You buy companies that have very strong dividends that have the cash flow to protect those dividends. AT&T and Verizon are very good examples of these. Very nice dividends, great cash flow. You should be comfortable with those. Financial preferreds, you can be comfortable with those. But if you have things you are uncomfortable with, that you've been, you don't want the cheese anymore, you just want out of the trap, you have to get rid of them after strong rallies like yesterday, because these are short covering rallies. The mere fact that the volume was not very strong yesterday and the lack of follow through today suggests that yesterday was a short covering rally, and you got to get rid of your bad ones on strength, buy your good ones on weakness.
All right, that's it. Strong dollar, crashing commodities, crashing energy prices, gasoline. We got 6 states below $2 a gallon. We got USA now, national average, AAA, $2.59. Tax cut for consumers. Retailers went up today. This was not a great day. It wasn't the worst day. Retailers are up 2%. We had good movement in Sears, Target, Kohl's, and J.C. Penney, a.k.a. Target. I know you hate this, Jim Lacamp. I just want to challenge you because I'm here to tell you commodity deflation, energy deflation, and a strong dollar are bad for producers and great for consumers, and it's time to be buying retailers and other consumer discretionaries. Go ahead, hate it, punch it, kick it, slam it.
You said the magic word, though. It's deflation, and the Fed is actively trying to reflate, but unfortunately it's not working its way into the system yet.
So deflation's great for consumers. Consumers love deflation. It means lower prices.
Deflation is not great for consumers because they lose their jobs when there's deflation. Asset sales continue to fall. Housing prices fall. Companies can't be profitable. They have to lay off people. Look at what CEOs are saying right now. They're saying, I don't know about next year. And when they're saying, I don't know about next year, you know what that means? Job cuts. When they say, I don't know about CapEx next year, job cuts. You know how they're getting productivity up? Job cuts. That means layoffs, and consumers aren't spending the extra dollars they're getting in right now from lower gas prices because they're worried about their jobs. Unemployment is accelerating.
We will see. I'm sorry.
No,
there's a difference. There's a difference.
Go ahead.
Larry, there's a difference between disinflation and deflation. And deflation is bad.
I just wanted to go back to the issue of Joe the Plumber and what Joe the Plumber is actually supposed to do. Now, Joe the Plumber is not buying stocks. He's not sitting around and waiting all day to figure out when he's going to call his broker. He's probably buying a mutual fund, and he's getting the end-of-the-day price. And he can't sit there at $2.59 because Vanguard's only going to take your order at, up till 3 p.m. What are you supposed to do, especially where the last hour is so volatile?
Is it still the hedges, Andrew? You cover this beat sometime. Is it still the hedges?
I think it's the hedge funds. I actually think it's mutual funds. I think it's people calling it 3 that, by the way, all of a sudden have to sell or do something in that last hour.
They see a rally.
They see a rally and people go.
Are those Joe the Plumbers, too? Seriously.
I think I'll tell you, my parents, my grandparents, all of the people, they're all trying to figure out what do you do. And I know a lot of people who are picking up the phone and calling Vanguard at $2.59.
Mike Ozanian, I meant to ask you, I don't know how this slipped my mind. Shortly after this TV show is completed, Barack Obama will address part of the nation on part of the broadcast networks. Is it your opinion, with regard to investment strategy an ace stock sector selection, that the Obama speech tonight is bullish for stocks tomorrow morning?
Absolutely no way, Larry.
Shocking.
I don't see.
I'm shocked to hear you say
absolutely
this.
don't see that.
I'm shocked to hear you
I
say
think the good news is, though, his presidency is already factored into stock prices. In fact, the consumer Michigan sentiment is now around 65. It's so low, we're in such great fear right now. But if you had gone back and bought every time it was this low, over the next 2 years, you would have made a lot of money. 1980, 1990.
So buy, it's in the market. Just saying the whole political thing's in the market.
It's a fear-driven market right now. It's a great time to buy.
We got Jack Welch coming up to talk a lot about what's going on with
dips
Did I
only,
get one positive recommendation from Lacamp? I heard a lot of shadow dancing and disagreement.
Yeah, you did.
Guess
You weren't
what is your
listening. You
one
weren't listening.
investment strategy for tomorrow?
More than one. You weren't listening. I said the financial preferreds, they have great yields on them, and you can buy them at big discounts to where they were issued. Also, companies that have nice dividends and big cash flow to cover their dividends, like some of these wireless telecom companies.
Jim, thank you. Mike Ozanian, thanks for joining us. Jim Lacamp, YouTube.